Good evening, traders. This is the market analysis for 24th of June. Today was a very volatile trading session. I hope most of you have come out of it either profitably or with as little loss as possible. Personally, I was trading both majorly on the short side today, and my index focus was Bank Nifty because around expiries on Wednesdays and Thursdays, I usually trade Bank Nifty. And this was a crucial reference zone that I had shared for Bank Nifty, stating that uh, higher time frame sellers were present in this area, 33,190 to 33,670, the entire price band where I wouldn't look for long. Initially, I was carrying overnight shorts, which I got a chance to exit with a minor loss. And then I tried to challenge the up move at the zone here, looking for rejection, sellers getting activated, and but buyers were too aggressive. And then somewhere in the afternoon at 11:25, this was a candle which prompted me to start slowly going short in an aggressive manner. For example, let me show you order flow here. Whenever the most common mistake a lot of traders do with order flow is that they tend to look at order flow in an isolated way. They don't combine it with other aspects of trading, because order flow is nothing but data of buying and selling on market order and limit order basis that is happening in the market. There are a lot of other things that happen in the background that just order flow doesn't show you. So first and foremost, you need good reference areas using some other method of analysis that you use to identify where uh, large buyers and sellers are present, or crucial pivotal zones in the markets, and then they use order flow there for confirmation. And to do that, I personally use volume analytics. And one more popular misconception about order flow is that for the markets to start reversing, or for the markets to start giving a movement, you need to see large sized contracts or large sized orders uh, in the system there. But that's not true. Institutions also use something called as iceberg orders to conceal their true size of their positions. So when you even see smaller orders hitting a particular area and price notwithstanding that zone, it doesn't mean that it is a weak move or it is a move that cannot sustain. There are ways, there is a knack also to identify iceberg orders just by looking at order flow. And this was one such instance. I deployed a short to just to test the water levels in the zone with day high as stop loss, and then once I saw this kind of tape movement as per order flow and price also breaking view up, then was aggressive in adding onto my shorts, and finally managed to close the day on a positive note with close to 1.5% on the capital. Being an option writer, I wound up my positions as soon as the options I sold started going below, the calls I sold started going below $10, because it's my thumb rule not to wait till zero, because uh, in my past experience, a lot of expiries, these kind of moves were seen. So uh, it's better not to get greedy and book below 10 is my rule, and that's what I did. And moving for tomorrow, the important reference areas that I see is that one, the higher time frame sellers zone has shifted now from uh, 15,660 to 15,590 and to 15,870. So this is the entire price structure that I'm looking at. As long as index continues to stay below it, as long as index tends to go into it, I will be looking for opportunities to short. And as I have been explaining since the past week, ever since we saw this cracking down move, that every rise into this reference is a good opportunity to sell, and it has been working beautifully. It makes sure that we are on the side of the trend and we do not get caught wrong footed. And it's also the case for tomorrow. As long as index doesn't break today's high, then my bias will be towards the short side. I will look to sell, and I will know, the system will show me if at all the longs that are being built in this zone is more than the shorts that are built in this particular price band. then that will be a high probability, good risk reward opportunity to go long. But until that happens, my focus would be on shorts. Moving on to Bank Nifty, in case of Bank Nifty, there is a slight change in the reference areas. It's now 33,110 to 33,476. This takes into consideration the real-time large players positions that are actually being built on a day in and day out basis from a comparative perspective. So again, this is a very good, this price band is an opportunity to go short. So any indications of rejection, I will use it to short in this zone, but not be long in Bank Nifty until we break above 33,476. And as long as we stay within this zone, we do not break it and we tend to see rejections from it, there is a higher probability of us moving to the downside. So I will not risk by writing put options or being long in Bank Nifty or Nifty in case of both the indices. When price starts accepting this area or accepting this zone and indicates that by movement of a breakout, I will be the first person to jump onto the longs bandwagon, since that would then be a high probability trade for me, and we have a higher chance of seeing short covering by all those late shorts that would be in the system. When that happens, I will let you know. Until then, the bias for me is short. And I hope this video was useful to you folks. If yes, please make sure to like the video and comment, and please join my Telegram channel where I share updates about shifts in large players positions and whether buyers are in control, sellers are in control, and also I share my trades on an intraday basis. The link is given in the description below. Thank you all. See you tomorrow.